I'm Charlotte McLeod with investingnews.com, and here today with me is Rich Checkan, President and COO at Asset Strategies International. Thank you so much for being here. Great to have you.
Thanks for having me. I'm always a pleasure to be with you.
Yes. Looking forward to the conversation. And of course, we are here at the Rules Symposium, and I think we've made it far enough in that we can start by talking about some of your key takeaways, interesting conversations that you're having here so far.
Yeah, so it's still early on, but already having interesting conversations. It's funny. We're a consumer nation here in the U.S., right? And I think many places around the world are consumer nations, but here really in the U.S. we're massively consumer oriented, and we love a sale, right? So something goes on sale, and when we went to bed the night before, we probably didn't want it, didn't need it. Now all of a sudden we're going to buy 5 of them, right? And that happens with virtually everything except gold. Gold has been absolutely on sale since the bombs started bursting in Iran, right? Since the end of January. And when gold goes on sale, we don't want 5 of them. We want to stand on the sidelines, or we want to divest. I talked to an attendee earlier today, and I explained that to him. He said, I'm one of those guys, right? And I was like, okay, well, tell me what's going on inside your mind. I want to understand this because you've got a great deal here in gold. And he's like, well, I think it could go down to $3,500, right? And I'm like, okay, do you know it will? And he's like, no, I don't. And he didn't really have a reason why he thought that. He just felt that it could go to $3,500. And I said, okay, well, what do we know? What do we know? And he kind of looked at me frazzled, and I said, we know that gold dropped $1,500 from all-time highs. Why wouldn't you take advantage of what you know, not what you're hoping might happen, right? So take a little of your cash, deploy it now, lock in that opportunity to buy well, and then if it goes lower, if you get your wish, buy some more and average down. But it's funny, gold investors are fickle. Somebody else asked me, when do gold buyers buy gold? And I said, when it's going up. I don't get it. It's not like you get better gold because it's more expensive. It's the same gold. You're just paying more for it.
Yeah, that's so true. So do you think you got through to this person? Did you make an impression?
I don't think I did.
Okay.
To be honest with you. But that's okay. I'm still trying to understand the psyche. I've only been doing this 30 years, Charlotte, so I still have a lot to learn. But I've seen that actually. Every time you see a dip, people wait on the sidelines. I think some of them just don't want to pull the trigger until they know the bottom is in, and you don't know the bottom is in until it's no longer in, and it's moving back up again. So I kind of get that, but for me, I'm just a rational person. I don't buy with passion, or I don't let passion drive my buying habits. I fill an allocation. I try to buy well as best I can within the circumstances. So if I see an opportunity to lock in $1,500 worth of savings on an ounce of gold when I know that everything that caused it to go to $5,500 an ounce is still in play in the economy, in the world, why wouldn't I take advantage of that? I just got to scratch my head.
Yeah. I wonder if maybe part of it is, wondering if I buy now, how much will I have left to allocate if it does go lower? Do you think that's part of it, just not knowing how much?
I don't think it is. You're saying because the price will rise, there'll be a higher allocation, you won't need to buy that last bit. I don't think people think about that. And the reason I say that is, gold just went in about 3-4 years, almost triple value, right? I think it was triple. And when it does that, you would think that anybody who had a full allocation to gold had 3 times more gold than they needed, right? Because the price went up that much. But those people weren't selling, so I don't think they're rebalancing. I think they buy gold and they forget about it, which is generally a good thing, so you save that purchasing power, effect for the future. But I don't think they look at it that deeply. I think they want to buy something that they know is moving higher.
Well, and you were
even though we don't know any of that.
Yeah, of course we don't know. We don't know. And you're saying before we turn the camera on, this trend is reflected in your sales as well. So
Yeah.
can you share about that, like Q1 versus Q2,
Yeah,
and maybe previous cycle trends?
yeah, no, there's a huge difference, and it's not just our sales. I mean, we keep open conversations with all our friends in the industry, wholesalers, retailers. We don't believe in a zero-sum gain, so there's other dealers on this floor that I consider friends, and we share information all the time. So I have those conversations. I can tell you we're not alone. What's going on is the first quarter for many of these dealers, whether they be wholesalers or retailers, probably the best quarters they've seen in their lifetime in the industry. I mean, fantastic numbers when we were hitting new highs at $5,600 an ounce. But the second quarter is a completely different story. So the bombs started falling. You saw at the beginning of February, right, or beginning of March. I'm losing track, but the bottom line is gold price started coming down, and when it did, it's like somebody turned off the spigot. We still see need-based selling from clients that are feeling the effects of many years worth of overlapping, inflation. So it may only be 4% this year, but over 5 years it's probably 26-30% higher prices. So there are people that are feeling that and selling off to cover that. We know that governments were selling to cover the purchase of oil. We know that as the stock markets fell, people were selling to cover margin calls. So a bit of all that is going on. But I still have well-heeled clients that every time we see a dip, they're in, buying well. I still see clients who love a deal. There are those out there. And when we have someone who's selling for a need or to rebalance, which is rare, but it's usually for a need, that we can reach out and they will pick up something a little cheaper than they probably could pay if I had to source it through a wholesaler. So we're still seeing that activity, but it's kind of a break-even quarter, for us, and I don't think we're alone.
Interesting to hear about those trends. And let's talk a little bit about why gold is going down. Well, we're in kind of a more sideways trend at this moment, but the last time we spoke was all the way back in November. So a lot has happened since then. We have to kind of back it up. We have the beginning of the Iran war is one point we should probably mention. I think a lot of people were surprised to see the gold price go down instead of up in that time of crisis.
No question. Everybody thinks that war or crisis equals higher gold prices. It's actually, if you look historically, it's really not the case. I could see initially that it might see a spike in prices, but I don't think that drives a long-term trend. What happened in this case is it's specific to the fact that there's a crisis going on in an area where we are so dependent on the oil exports, right? Coming through the Straits of Hormuz, 1/5 of the world's oil. So everybody looked at this, and I think they're overanalyzing it, and they have from the start, where they say, okay, this war is about oil. It's cutting off oil supply, which is going to lead to higher prices of everything, to include oil. You feel at the gas pump but your gallon of milk's going to cost more, your produce, et cetera. So everything's going to cost more. That leads to price inflation. Price inflation is going to tip the Fed's hands, and they've got to raise interest rates to go ahead and curb inflation. And therefore, it's well known that inflation is bad or rising interest rates are bad for gold or bearish for gold. And I'm thinking, my God, you don't think about anything that hard. And let's be realistic about this. We're at 3.5 to 3.75 interest rates. And where's inflation at? 4 plus. Yeah. So right now, your real return is negative, okay, if you're not holding gold. How is owning gold a bad thing here, right? In fact, you got to see the interest rates go up to 8, 9, 10, 11% before it becomes enticing to buy a term deposit in order to get that interest rate, counteract inflation, and make a profit. We've got a ways to go. And Charlotte, do you think we will ever get there with a $40 trillion debt? There's no way in hell we're going to 8, 9, 10%. We can't afford to, right? So I don't know. I think this whole interest rate versus gold thing is way overdone. It's silly, but so many people are talking about it every day. It drives me crazy.
Yeah. We'll get into that a little
Okay.
bit more, and we can hear your thoughts. But before we go there, I want to go back to you were saying when the Iran war began, there was need-based selling, and I think there were a lot of headlines at the time about some central banks selling gold.
Yeah.
So I want to check in with you on that and get the real picture of what's going on with central banks, because I don't think it's broadly a picture of selling.
It's not. Okay, so there were countries that needed to sell their liquid asset, their gold, to buy oil because they needed oil, right? That's a need-based selling at the central bank level. Okay, great. That's what gold is there for. It did its job, but the trend is different. You look at the net results from World Gold Council for second quarter thus far through the year. We are on pace to match what we've been doing for 4 years already. Central banks are amassing gold at a higher level than they had for like 50, 60 years. That trend is not abating. It dipped a little last year. I think instead of getting to 1,000 ounces or 1,000 metric tons, we only sold they only bought 850 metric tons. And this year we're on pace to get back up to 1,000. So even though there was selling at the central bank level, the trend is clearly toward central bank accumulation, and the surveys suggest that they all expect to have higher reserves in the future of gold, not dollars.
Yeah. So as usual, we've got to go beyond the headlines. All right, let's take a look at what the Fed is doing and what the Fed's path forward could be, because it does seem like we've had that transition. Everybody was focused on the war. Now it's feeding into this focus on inflation and the Fed and what are they going to do. Yeah. Maybe before we go into the Fed's path forward, we should get your thoughts on Kevin Warsh, new Fed chair since we last spoke, and a lot of takeaways most likely from his comments at the first press conference.
I'd like to share my takeaways, but first I think I need to form a committee. No, I'm just kidding.
That's how it's done.
It seems like we've got 5 different committees to analyze this, that, and the other, how we take in data and everything else. Everybody walked away from that presser that he's hawkish and interest rates are absolutely going higher. I think he sent the signal that he wants to be independent. I'm still, from the past, I'm not convinced that the Fed has ever been independent. They're put in a bad position by Congress all the time. And they can't solve our problems with interest rate manipulation. It just can't happen. Congress has to balance budgets. They need to save money and pay down the debt. That's the only way this gets better. At some point, it'll get really bad. I thought 40 trillion was enough, but at some point it'll get really bad, and the Congress will start doing the right thing, stop worrying about re-election, and start doing the right thing by American citizens. But in the meantime, Kevin Warsh has got the same problem that Jerome Powell had and everybody else before him. Janet Yellen, Ben Bernanke, et cetera. They have to try to keep confidence in the dollar when there really should be none. The rest of the world is seeing it clearly. That's why those central banks are buying. They're not doing it because they're comfortable with treasuries and the fiscal soundness of the U.S. They're doing it because they're nervous about those things. And American citizens should be just as concerned. Kevin Warsh cannot fix this. I wish he could. He cannot.
With that in mind,
he says he can, by the way. He says that they have failed in that mandate for 5 years, and they will get inflation under control. I don't know how you can say that without just, a hope and a prayer.
What do you think he will attempt to do? Because there's also the issue, it seems like we've got a more divided Fed than we might usually have.
Yeah, I think one of the things he's going to do is he's going to change the way we measure things, right? So that'll give him a little bit more wiggle room if we change the way we calculate inflation, So I think he made that clear that that's one of the things he's absolutely considering. I think they're I forget what they called it, but they're going to lop off the outliers and just deal with they'll get a more, I guess, palatable average inflation figure. So that's one thing. I think he's going to keep the rhetoric up. I don't know that he's going to communicate as much as Powell did. I get the feeling that he's not going to. He said that, I want to say, if I recall, that he did not cast a vote.
I think that's right.
For interest rates. He has 1 vote. I don't really think it makes a big difference. You're right, it's divided. At some point, if inflation heats up, they're going to have to raise rates. I don't think they can raise it enough. I don't think they could raise it fast enough to have an impact. I don't know how much he can change. Again, I've looked at the Fed chairman as powerless against this issue for a long time. He doesn't change that.
Yeah, and it really seems like it's coming to a head or starting to come to a head. I wonder if we can talk a little bit more about inflation. So concerns about inflation have really heated up again since the Iran war began. And now we seem to be seeing a cooling off in tensions. But a lot of what I hear is that, we've had these massive disruptions over the course of months. So it's not like it comes right back down. So for inflation, how are you looking at that progressing?
Well, I think we got a signal when we looked at the last CPI and PPI numbers, right?
Yeah.
So inflation was up; it was over 4%. PPI, I want to say, was 6-something percent. So that is future CPI, right? So if everything that goes into the production of the end product that we buy is higher in price, the end product's going to be higher in price. So not only are we already seeing the immediate impact of higher consumer price inflation, we already see baked in even higher consumer price inflation. I don't know how you stop that. It's done, right? So that oil has an impact on every good or product that makes it to market. I don't care what industry, it gets there in some sort of dinosaur juice powered vehicle, right? And those higher prices will show up, and I don't think they're going to be small increases.
Okay, and this relates to another question I had. Last time we spoke, you said the U.S. economy was looking okay compared to other economies, but there's a big strain on consumers. So I guess a similar assessment right now.
Yeah, I think it's going to get a little bit worse. I think we have not seen the worst of the pain, unfortunately. I wish we had. Those that have, I told you there is some need-based selling of gold. Those that have that safety net can take advantage of it. Those that don't, I feel for them. I don't know the solution. You got to do without. So you got to make cuts somewhere. I don't know if, obviously the last things get cut are shelter and food and things like that, healthcare. But a lot of people are cutting healthcare right now. They've cut out some of the extra things, the niceties, the things that make life a bit more enjoyable. I hear stories of people that are going without healthcare. That's scary. If you have a family, if you take care of yourself, try to keep your health. It's number one. Nothing else happens unless you're healthy. So I think we're going to see still a deeper impact.
Yeah, that's very, very scary. Speaking about the U.S., I'm starting to hear more rumblings about the upcoming midterm elections and questions about what is that going to look like? How could that change the picture? Are we going to see, again, more division in the U.S.? So how significant do you think those midterms will be?
I don't know. And I say that for this reason. I don't see the Republicans and the Democrats, locking arms and singing Kumbaya. That's not happening. If anything, it's getting worse. The significant difference, though, is within the party. And I say both Democrats and Republicans, we're seeing divisions, right? So there are folks that are kind of separating from President Trump in the Republican Party, or they're ousting folks that aren't, locked in to their agenda through efforts to put in a different candidate in different jurisdictions. And what's going on with the Democrats. I mean, you've got the far left that is emerging. I mean, we have a run on communism going on in the U.S., and big cities in their elections are embracing that. It's a direct reflection of how bad things are. So, we talked about, the effects of inflation and could they get worse. I think that continues to get worse, and I think that division within the party gets worse. Now, how does that play out in the election? Does it divide the party and the Republicans come out winners? Do they bond for the election just to make sure the Republicans don't? I don't know. Right now, it doesn't look like anybody's talking on a civil basis. It's going to be a very interesting election.
Yeah, and probably, a little too soon
and by
to
the
know.
way, I wish every time that somebody comes up and they preach communism, I wish someone in the audience would ask the question, tell me any time, just one, in history where that has worked. I would love to hear that example.
Yeah. Well, let's see.
But
Maybe
that's a
it's,
whole different
yeah, that's a whole,
conversation.
yeah, that goes going in a different direction. I think if we go back to gold, so we
Yeah.
can see there's a lot of factors that are bullish for the metal. We're in this time right now where we're going a little bit sideways, or maybe there's possible downside. We don't know.
It could still happen.
It could happen.
Short term, whatever.
What do you think? Is there a particular factor that could break us into the next leg higher?
It's funny. Somebody else asked me that question earlier today. They said, what is it that's going to make people buy gold and drive the price higher? Higher prices.
Okay.
I've seen it for 30 years now, Charlotte. People sit on the sidelines until they see the trend established. And when gold price is going higher, that's when people jump in with both feet and they want it. I don't know what it is. Do they want the higher price gold because it's better? It's no more gold. It just costs more. But I think there is something to the fact that they want to see the trend established before they buy into it. I'm a bargain hunter. When I see something $1,500 cheaper than it ought to be, I was comfortable with $5,600. I thought it should have been higher from there. It got there probably too quickly, and a correction was due. But it should still go much higher. When I see that, and I've got a $1,500 deal, I want to take advantage of that because nothing has changed that drove that price to that level in the first place.
Yeah, I think absolutely it makes sense. And that's quite interesting. So we need a higher price to get
To
higher
get
prices.
people buying to drive the prices higher.
Right.
Yeah.
Do you have a particular price outlook for the rest of 2026, or we're just again too soon to say right now?
Yeah, I don't think it's too soon to say. I mean, you can make predictions all you want. I'll share. I had a chance to spend some time with Rudy Frank at Seabridge a little bit earlier in the weekend, and they do a lot of good macro there, and their outlook I tend to buy into. He said, if I get this right, that they expected gold to be back up to the all-time highs, about $5,600 by the end of the year, and by the end of next year, probably 6,600. 6,500, whatever the case. So I'm close. So don't quote me that I misquoted Rudy. But I tend to agree with that, and I think the summer is typically not the time where you see higher precious metals prices. We as dealers call it the summer doldrums. I expect we'll kind of trade sideways, list support here during the summer. But in the fall, I see it start to rise, and I can buy into 5,500 and back to the all-time highs by the end of the year. I can get my head around that.
Yeah, it sounds pretty reasonable given what we've seen. And of course, I have to check in on silver at least briefly as well. So I think for our audience, there's a couple of main questions about silver that I see repeated. So the first is, have we established a floor at that $50 level? Is that safe? And then again, on the other side, can we get back to triple-digit silver this year?
Okay, so maybe and yes.
Okay.
So we're done. No, in terms of the floor, it sure looks like we got there. Was it 57, 58, whatever that bounced off of, right around 60. Seems pretty resilient, support. It could go lower, just like gold. Who knows? But that's a 50% drop from the all-time highs, and that is an absolute wonderful opportunity. My thoughts on silver, that's profit-oriented. Gold is wealth insurance-oriented. So I see a great profit potential for silver from there because I do think it should go higher. I talked with you for many years now, and for the longest time, I told you got that 45-year cup and handle formation. I expect to see silver at $90 to $100 an ounce. We got there, and then we pulled back, a 50% retracement. And I still believe that's where we belonged, but the things that got us there haven't changed, right? So we had 11 years of deficit or surplus production. Then we had, about 5 years of deficit production. The first two wiped out 11 years of surplus. We've been digging the hole deeper for 3 more years. That's still in play. The demand is still off the charts. For solar panels, for data centers, for everything. the new batteries as well, silver oxide, I think, or whatever they are, solid state batteries. So the bottom line is there's a lot of demand still out there. There's a constraint on supply, and that's all in play. And then at the beginning of this year, into effect went Chinese export restrictions. So deeper restrictions holding back more silver. I think they're the 70% supplier of refined silver to the world, okay? And they said, we're not gonna send as much. Okay, that's gonna have an impact. When they announced those restrictions, I thought my previous predictions of 90 to 100 doubled. I still think that, even though we dropped down to 58, okay? I think silver has the potential to go to 180 to 200 unless China lifts those export restrictions. I think that has a significant impact.
Okay, well, that will be something for us to watch for on silver. I wonder, among your customers, are there any different trends in silver? Are people looking on that more favorably in terms of it's at a discount now, or same for gold?
I don't think there's a discernible difference. The people that tend to favor the silver have been buying silver throughout. They may change what they buy from time to time. It boggles my mind, but junk silver, pre-1965 US 90% silver, quarters, dimes, and half dollars, that's been selling at a discount to spot. So not just I can buy it less than silver's price. My clients, when I tack on my retail premium, can buy it at a discount to the silver price. And that just screams that there's so much of it that was bought in at the 100, 115 level, that the wholesalers are still buried in junk silver. But they're also buried in gold coins. They're buried in silver rounds, silver eagles, et cetera. So the premiums have not started coming back up again, which tells me we are still cheap and hated for gold and silver. And what I've said for a couple of years now ain't gonna change. Gold is dirt cheap. Silver is even cheaper.
Well, I think that sounds like a good point to wrap it up, unless you've got any final thoughts you would leave people with.
No, we saw a run for gold and silver. People bought into that big time. It got hot and heavy. It's going to happen again. And just when it does, just a word of caution, the greedy creeps come out. So make sure you're dealing with trusted dealers. My thoughts. If they don't buy back, don't buy from them, because they're charging you too much. There's no other reason they wouldn't buy back from you. Little things like that. Get a few quotes, compare them, work with folks that are referred by the people you know and trust. Chances are they're not going to refer them if they're bad people. So be careful.
Yeah. Also good final words to end on. Yeah. Thank you so much for coming on today to tell us what's going on in gold and silver. I appreciate it.
Yeah, no problem. Always my pleasure. Looking forward to the next time.
Yes, me as well. All right, for now, I'm Charlotte McLeod with investingnews.com, and this is Rich Checkan with Asset Strategies International.